to understand what they're going to qualify for and how important those numbers really are. Just a crazy example, I had a lady who we were buying, and it was right before we were going to close, and they changed jobs, and I was like, oh my God,
No.
you changed jobs? Like, but you didn't tell me, and you didn't tell the lender, and oh my God. But the good part about it is they went a very like high paying job, and the job they actually uh, took was even higher paying. So it was not a problem, but it's like, you just get so like worried, like, oh my God,
Yeah,
what's gonna happen,
absolutely.
right? Especially now with the rates that were changing like so rapidly, right?
Exactly. Like,
So how can,
oh,
sorry,
sorry.
go ahead. No,
Yeah,
no,
like
good.
when it comes to making purchases, like during that time frame before closing, we always recommend that you don't change your job, you don't apply for any new credit, anything that can like ding your credit score or like can impact your application. We always recommend like avoiding big purchases and stuff like that, just to avoid, a lender rescinding their offer, and then you lose out on your home.
It's like that new car, right?
Yeah. Don't get the new car. Wait.
So how how can the first time home buyer like determine the appropriate mortgage amount, monthly payments, that sort of stuff that align like with their budget and financial goals? Like,
Well, again, you could always go with a mortgage agent if numbers aren't your thing. But the CMHC always recommends that you don't go above 32% of your gross income when it comes to mortgage payments, heating, water bills, etc. So that's a guideline that they give you right there. That's like a
mhm,
general way to know what you can afford. If you want to go deeper, of course, go to a mortgage agent and get that sorted out. But that's pretty much the guideline, 32%. And then there's other factors like the TDS ratio, the GDS ratio, and like, you can go deeper into figuring out what your best payments are. But you always want to avoid being house poor. A lot of times people get a house and they're so happy to be in there, but then the bills start coming in.
mhm,
The maintenance starts hitting, like all of those like extra expenses that they didn't think about are affecting their bottom line, what they can spend on for
yeah,
fun. So they end up
yeah.
having this lovely house, but they can't afford to do anything else.